Hello, everyone. PayPal is gearing up to announce its first quarter 2024 earnings results on the morning of April 30th. With investors eagerly awaiting this report, the burning question on everyone's mind is whether they should consider purchasing the stock before this significant event. In this discourse, we'll delve into what to anticipate from PayPal's earnings report, highlight key metrics to observe, and ultimately provide insights on whether buying before or after the report, or perhaps abstaining from purchasing altogether, is a prudent move. So let's dive into the analysis. First and foremost, a critical aspect to scrutinize is PayPal's active account base. In the last quarter, PayPal reported 426 million active accounts, marking a decline of 2.5 million from the preceding quarter. This consistent trend of shedding active accounts over several consecutive quarters raises concerns as it impacts PayPal's ability to engage with merchants and expand its payment network. The more active accounts PayPal maintains, the more attractive it becomes to money and investment, fostering a positive cycle of engagement.
Ever wondered why
investors should closely monitor whether PayPal manages to stabilize these losses?
Investing in the stock market
reverse the
might
trend
seem
entirely.
daunting.
Another
but it's a
pivotal
powerful
metric to
tool for
assess
building
is
wealth.
PayPal's transaction
Why?
margin.
It's all about
While there was a
time
notable
and compound
improvement in the
interest.
latest
Starting
quarter,
young
with a
means more time for your
3.5-point
investments to
sequential
grow.
increase,
Think of it like planting a
sustained
tree.
positive momentum
The earlier
in this
you plant,
area
the
is
longer
imperative.
it grows and the bigger
The trajectory
it
of
gets.
transaction
Worried about
margin
risks?
is indicative
The earlier
of
you
PayPal's
start,
profitability
the more time you have to
and its
recover
ability
and
to
learn from
generate
market
revenue
ups
from
and
branded
downs.
PayPal
And if you're
transactions
starting at
versus
50,
non-branded sources.
no worries.
A
It's about
continued
choosing
positive
the right
trend
strategies
would
suited to
alleviate
your
investor
stage in life.
concern. The more active accounts PayPal maintains, the more attractive it becomes to merchants, fostering a positive cycle of engagement. Thus, investors should closely monitor whether PayPal manages to stabilize these losses, if not reverse the trend entirely. Another pivotal metric to assess is PayPal's transaction margin. While there was a notable improvement in the latest quarter, with a 3.5-point sequential increase, sustained positive momentum in this area is imperative. The trajectory of transaction margin is indicative of PayPal's profitability and its ability to generate revenue from branded PayPal transactions versus non-branded sources. A continued positive trend would alleviate investor concerns, whereas a reversal to negative territory could spell trouble for the stock price. Furthermore, attention should be directed towards PayPal's free cash flow. In fiscal year 2023, PayPal generated $4.2 billion in free cash flow, with a forecast of $5 billion for 2024. Any indications of surpassing this forecast or reaffirming it with heightened confidence would bode well for investor sentiment. Additionally, the guidance on earnings per share for 2024 warrants scrutiny, especially considering the initial conservative forecast that caused a significant stock price decline. Any upgrades or adjustments to this guidance could sway investor perceptions and influence market reactions. It's worth noting the leadership transition at PayPal, with the new CEO having assumed the role recently. Observing strategic changes implemented under the new leadership, progress in streamlining operations, and any forthcoming announcements regarding product offerings or restructuring initiatives is crucial. The impact of such changes on PayPal's long-term trajectory and competitiveness should not be underestimated. From a valuation perspective, PayPal currently trades at a relatively cheap forward price-to-earnings ratio of 11.67. This discounted valuation, coupled with the company's growth potential and market positioning, presents an attractive proposition for investors. However, it's essential to acknowledge the inherent risks associated with the CEO transition and the uncertainties surrounding earnings forecasts. Having previously recommended PayPal as one of the top stocks to buy in 2024, we maintain a positive outlook on its prospects. While purchasing before an earnings release entails heightened risk due to potential volatility, the favorable risk-reward profile and cheap valuation make PayPal an enticing investment opportunity. Potential upgrades to earnings forecasts following the report could serve as catalysts for stock price appreciation. For risk-averse investors, exercising caution and waiting until after the earnings release to make a purchase may be prudent. However, for those comfortable with increased volatility and seeking to capitalize on potential upside, buying before the earnings report could prove rewarding. Ultimately, individual risk tolerance and investment objectives should dictate the timing of investment decisions regarding PayPal stock. Ready to start your investment journey? Explore our channel for more insights on making smart, informed investment choices. Remember, it's never too late or too early to start investing in your future. Join us at Money and Investment for more tips and tricks on building your wealth. Subscribe and turn on notifications so you don't miss out.